Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Friday, July 14th, and then we'll see how things look for Monday, July 17th. We had a pretty sleepy day overall. We're still dealing with an overbought situation, but the market is still positive. We still have some overhead resistance, and so far support has been holding, so we're kind of in between right now as the market decides what it wants to do. So let's go back and talk about what happened. There was positive news that came out. We had bank earnings that were well received, upgrades from analysts, economic reports appeared friendly, but the market had real trouble advancing due to some profit taking that occurred. Small and mid caps did lag behind on Friday. Fed Governor Waller came out and kind of rained on everybody's parade, where he says he doesn't see any reason why the Fed should not raise interest rates at the next meeting, and that 2 rate hikes over the last 4 meetings this year are likely. On a short-term basis, we have the CMB composite that's still extreme positive, as well as our moving average study, the CCI 14 and 20, the Stochh RSI, the Williams percent R, our standard deviations chart, and the RSI based on 9 periods. Intermediate term, we have the balance of power that's still extreme. The PMO studies, oscillators are still showing some negative divergence, but they're turning more positive. The Sean trend meter and the BPI based on the S&P 500 as well as the NASDAQ 100. The dollar advanced after going down below 100 and interest rates were up. Both of these provided some headwinds for stocks. All of the yield curves that we follow still remain inverted. Sentiment is extreme, even though it didn't change. It's at 80. It's still extreme positive. Our trend is positive, but with the slight down day, the green line is coming down, but the ADX is above its moving average. However, both the moving average and the ADX are above 20, and they're starting to turn back up, so they could be getting a little extreme positive. Even with the slight down day, I'm keeping our bias at positive, and our momentum is still positive. The economic reports that came out, we had consumer sentiment, the preliminary reading. It came in at 72.6, higher than the 65.6 they had expected. Last time we had this report, it was at 64.4. If you go back a year ago, we were at 51.5. Import prices were down 0.2%. Last time they were down 0.4%. If you take out fuel, we were down 0.4%. Last time they were unchanged. Export prices were down 0.9%. Last time they were down 1.9%. If you take out ag products, we were down 0.9%. Last time we were down 1.9%. On a year-over-year basis, that means that we're going down 6.1%, where last time we had this report, it looked like we were going down annually 10.7%. For export prices, they're on an annual basis down 12%, where last time they were up 18.6%. Here's the intraday chart showing how we did have a positive open. We came almost up to R1, then we eventually got above it a little bit before coming down to the unchanged level. We tried to bounce back up, but then we came down and actually went negative and hit the daily pivot. We bounced up off of that, then saw some selling going into the close. A little bit of buying right at the end. It did let us close right on the daily pivot. Here's the intraday chart for the S&P growth versus value, where it had a pretty good up day. It shot up at the beginning and then spent the rest of the day going down. The ADX is showing where we're going back above the moving average, but our green line's on top, but it's giving us a pretty extreme reading. So this could be taken as a continuation of being overbought. On the daily chart, nothing was really decided. We still have overhead resistance if we go higher. We haven't really fallen all that much, but we should be able to hit some support down here if we fall. On the bottom, we see where volume was right about average. This next chart is kind of positive in that the BPI, it's getting extreme positive. These are the point and figure buy or sell signals inside the S&P. When this is going up, that means there's more internal strength, and we are continuing to advance, suggesting more of a broader market participation. We're also keeping an eye on the transports. They were down both Thursday and Friday, but they're still above this previous high. We saw a little bit of a turn down with the utilities after they had had a couple of good days. The NASDAQ 100 is still above the 61.8% retracement level. If we start to fall, we'll be watching that for support. Also looking at the NASDAQ 100, we're above this previous high, but we're dealing with this R1 resistance level, We opened above that and then came down and closed right about on that point. We're also looking at the FANG index. We were able to get above the all-time high. We set a new high on an intraday basis, but then we came back down and closed right below the previous high. On a longer-term basis, we're still dealing with this resistance. When we look at the S&P 500 weekly chart, we haven't decided if we're going to break above that or if this is going to present a problem and we're going to start coming back down. We're seeing a similar situation with the NASDAQ. It got above this resistance level, but then ended up coming back down. When we look at the NASDAQ 100 to Dow ratio, we're also looking very extreme. Other times when this happened, that did not portend to good things for the market. We're going to try to determine, is this time different? Can we even go higher with this ratio? So what's our outlook for Monday? The technicals are positive, but we continue to be overbought. We'll be getting the Empire State Manufacturing Survey, and then we're keeping an eye on all the different geopolitical events, but the market's fixated on inflation and interest rates. Here is the economic calendar for the upcoming week. Please note that we don't have any economic reports coming out on Friday. Here is the updated speech schedule for Fed members. Both speeches will be given on Tuesday, and they'll be speaking at the same time. Here's the Stock Traders Almanac statistics, where we're neutral to positive with the Dow, we're more negative with the S&P, and we're neutral to negative with the NASDAQ. So we're seeing different signals. We will be on the 10th trading day of the month, and this is when we start to come into the middle part of July, where historically we see some weakness. And we're also watching the NASDAQ, also performing well to the middle part of July before seeing some weakness. So our scenarios, not going with the downwind right now, even though we are overbought, our technicals are still quite positive. So we do default to the positive side, even though we're dealing with an overbought situation. We're not going with the sideways trend right now because our ADX and the moving average are both above 20. What are the warning signs? Our longer-term trend signals, those weekly charts that I showed, they could be signaling that we're at a top. It'll take some time for that to get worked out. Our oscillators are still showing negative divergences, but they are improving. The VIX is showing that there's not a lot of fear. That's why we're also watching another chart where we take the S&P to VIX ratio. It's starting to come down slightly, and we're going to see if that has an impact on the market. The cumulative new highs, new lows continue to show weakness in the NASDAQ. The 3-month yield is still above where it was back in 2007, right before the great financial crisis. S&P growth is weakening a little bit, even though it's still in an uptrend. And we're coming into the bulk of earnings season. On the positive side, our longer-term seasonality and setups that I usually go through in the weekly video, those are still in the background. Our Special K daily chart is positive, but be aware that the weekly chart is negative. Our longer-term equity put-call ratio is looking more positive. The S&P is still above the downtrend channel upper line. We're still in a risk-on posture, which means that we're favoring stocks over bonds. The Dow transports are showing some improvement, but they were down slightly on Thursday and Friday. Lower price levels so far have been providing support, but we really haven't fallen all that much. The S&P continues to outperform utilities. The NASDAQ and the NASDAQ 100 are above resistance. Can they stay above those resistance levels? And the Staples to S&P 500 ratio is declining, which often gives support to the S&P. The small cap Russell 2000 index, as well as the mid caps, have generated recent golden crosses. Please be aware that the small cap S&P index has not generated a golden cross. Small and mid cap growth, especially mid cap growth, continue to be positive. And the Copic curve just generated a buy signal. So our conclusion, the S&P remains positive, but we're still dealing with this overbought situation. We have some pretty long-term overhead resistance above current prices. In the short term, we're positive, but still looking overbought. Intermediate term, we're also showing some overbought indications. Now, we can still go higher than this, but we've got a lot of resistance, long-term resistance, and the market looked pretty tired in Friday's session. Long term, though, we still remain positive. Thank you. I hope you have a wonderful weekend, and I will talk to you in the next video.